Welcome to the Business Outlook Survey press conference call. I'm Tom Elliott with the Public Affairs Department at the Federal Reserve Bank of Philadelphia. With me today is Mike Treving, Senior Economic Analyst in our Research Department. Today we're going to talk about what manufacturing firms had to say about business activity in June. First, Mike will give us a summary of today's report.
Thanks, Tom. The indicators from our June manufacturing survey suggest that regional factory activity increased this month. All of the survey's broadest current diffusion indexes, with the exception of employment, were positive this month, suggesting growth from May levels. Current new orders and shipments diffusion indexes showed notable increases this month, and on balance, prices of purchased inputs and final goods prices were higher this month. The broadest indicators of future activity, including employment, improved this month and continue to suggest that firms expect overall growth over the next 6 months.
Okay, great. We're going to open it up to questions about the report. We'll start with Ellen Froelich from Reuters. Ellen, any questions?
Yes, I mean, we've had some sort of, kind of more depressed readings in this. Do we need to have more than one to sort of, cite a trend, or do you think that the subcomponents of this point to further improvements or at least positive readings?
Right. Yeah, as you know, we've had these up and down movements of our diffusion index over the last 6 months or so, and we think we see a positive trend, if you will, but it's reversed the next month. At least this month, we saw improvement across the board, fairly sizable diffusion index increases, at least for new orders and shipments, and some improvement on the average work week, but still on balance, slight declines in employment. So it would be nice to see that employment number rise above zero to parallel the other increases. The other thing to note is that some of the increase is attributable to declines in the shares of firms reporting decreases. That's the nature of the diffusion indexes.
Mike, can you repeat that? Some of the other increases, what?
Some of the increases in the diffusion index from May are attributable to declines in the share of firms reporting decreases. So the diffusion index is calculated by that difference. So it's not always firms increasing activity or showing increases. Sometimes it's just firms that aren't reporting decreases. It was split pretty much this month. We had an increase in the share of firms reporting increases from 24% to 34%. So that is the positive element of the report.
Ellen, a follow-up question.
No, thank you. Not
Okay.
right now, thank you.
I'll go now to Stephen Joyce from Bloomberg BNA.
I've got 2 questions, and I'll ask them right now. The first is, I was hoping to get a little color on prices paid, prices received. You noted the prices paid, went up quite dramatically, and I was wondering if that hints at sort of traces of inflationary pressures or something entirely different than that. And the second question is on the employment figures. The work week number improved as a ratio more than the number of employees, and I'm wondering if the responses show that people or employers are expanding the hours of their current workforce in anticipation of hiring new employees, and that's the reason that the work week improved more than the number of employees. Thanks.
Yeah, on that last question, it's hard to tell because we don't ask specific questions about the mix, if you will. We just rely on the indicators themselves, and as I mentioned in the overview, we did see at least a flattening out, if you will, of the average work week, where we had some declines. So that's a positive positive element of the employment numbers. We did have some slight improvement in the current employment index, but it's still on balance negative. And with regard to the price numbers, we did see an increase in both prices paid and prices received. I wouldn't draw too many conclusions about a trend from 1 month's numbers. On the prices paid side, we had an increase in the share of firms reporting increased prices from about 18% to 28%, which you have to go back to November or December of last year where we saw those same shares, but we didn't see inflation, if you will, in manufacturing prices, with those kind of readings. And we're still seeing on the prices paid side about 66% of the firms still reporting no change in prices month to month. And on the prices received side, about 3/4 or over 75% of the firms reporting no change in their own manufactured goods prices. So these indexes are sensitive to the mix reporting increases and decreases, but still a large share of the firms that are reporting steady prices month to month.
Great. Stephen, a follow-up question?
Nothing more, thank you.
Okay, and there's a couple of other areas that we should probably cover. Mike, the comments section, respondents often volunteer their own comments on business conditions.
Mm-hmm.
How would you characterize this month's comments in the context of the data?
Right. We haven't talked about the 6-month forecast much. We did see improvements in the 6-month forecasts on activity, orders, and shipments, and a fairly sizable improvement on the employment forecast. We look for the comments to improved outlook. The firms tend to still be very, very cautious and optimistic when it comes to making statements about the future. However, we did see a few extra comments this month about improved activity on the current side that coincided with the overall diffusion indexes. So I'd say, the comments are consistent, yet on the forecast side, the uncertainty about the growth in demand for manufacturing still is quite on their minds.
Okay. And finally, the special questions section asked about production and employment expectations. Did the responses shed any light on future business conditions?
Right. We asked this month about the firm's short-run production and employment plans over the next 6 months at least, and we found that about half of the firms had plans to increase production, and the other half not plans to increase production. And then we asked them about how the increased production would be accomplished in terms of adding workers. And among the firms that said they would be increasing production, about 1/4 of those firms said they would be adding additional workers, where the remaining firms in that category were increasing the hours or relying on increased productivity. This is, of course, looking forward, and these are their expectations over the next 6 months. And among the firms not planning to increase production, we asked them if they did have demand to increase production, how would that be accomplished? And we saw smaller percentages of firms that said they would be adding workers, which I think maybe suggests, the slack nature of their current situation. They're able to increase production without adding workers. So it does give us a flavor for the kind of mix of hours and employment in the manufacturing sector going over the next 6 months. And that answers somewhat Stephen's question earlier about adding workers versus increasing hours, but this question really relied on questions looking 6 months forward rather than an appraisal of the current situation.
Okay. And I'm just going to check in one last time with our reporters. Stephen, any other follow-up questions?
No, thank you.
And Ellen?
Yes, I do have some. First of all, I want to clarify that 6 months going forward, half the firms thought that they would be increasing production, but of that half, only a quarter. So we're talking about 1/8 of the firms all told, right?
No, the 20.
Right, but talking about 1/8 of the firms, a quarter of the half.
No, actually, the 25% is of the entire group.
Okay.
Yeah.
Okay. Okay. Then I just wanted to ask you whether you perceive that there are any underlying numbers in this report that sort of belie the apparent strength. I'm thinking there aren't, but I want to know what you think.
Only in the 6-month forecast, I think we saw some improvement on the employment question, and even in the capital expenditure numbers, we saw some improvement in the overall diffusion index. So often, some improvement on the current side filters into expectations over the next 6 months. But I temper that with the comments that we're receiving from firms that really didn't validate improved optimism, if you will. But the numbers indeed were in the diffusion indexes were looking better from last month.
Right. So it's almost like people have the attitude seeing and believing. Like if they see it now, they're willing to concede that things, some improvement, but that they're not ready to extrapolate from that things will be better in 6 months. Is that what you're saying?
Yeah, I don't want to read too much into what's in their minds when they fill out the form. The questions are fairly simple, in terms of what they expect. We're just asking them what they expect these variables to do over the next 6 months, and we're not asking about the pace, just the direction, more or less. So
right, but the 6-month outlook was less positive than current. Are you saying?
It was better than last month, the 6-month forecast. We saw about the same percentage of firms expecting increases in overall activity, a little bit of improvement in the firms expecting improvement in orders, and a better outlook in terms of employment outlook, where last month we had about 24% of the firms expecting to raise their payrolls over the next 6 months, and this month it looks like about a third of the firms. So that is notable.
But you say a third, but now you're saying, but before you were saying 25%.
Right. That is from the special question. So the other 6-month question is the standard form. So there may be slight differences in the way we've computed the shares in terms of seasonal adjustments and that kind of thing.
I see.
Or I'd focus their attention, on that, the nature of the way we ask that question.
And the strength in new orders, how confident are you in that term continuing? Or you're not going to say?
Yeah, I don't like to forecast these things month to month, and of course now we're coming into the summer months where we have traditional plant shutdowns and slowing, so it'll be a little more difficult, I think, to read the numbers the next few months as the seasonal factors and the impact of traditional closings and slowdowns factor into the data.
Okay, Alan, any follow-up questions?
That's it. Thank you very much.
And we talked about quite a bit, so Stephen, any other follow-up questions?
No, thank you.
All right, very good. I'd like to thank you both for calling in to our press conference call for June's Business Outlook Survey.
Thank you very much.
Thank you.
Look for next month's survey at 10 a.m. on Thursday, July 18th, 2013.